It's risky investing in the S&P 500 alone. So I'm going to give you two examples of why you shouldn't only own an ETF like VOO. Just the S&P 500, because there's significant risk. And you can go a decade and a half and your money can go nowhere. And I'll show you an example with it right here. So this is the chart of the S&P 500 going back into the 60s and 70s. And you'll notice I drew a line from this point to that point. Now, if you'll notice, if you look at that point right there, that's roughly July 1959. And you go all the way over to this point, which is basically flat. And you got October 1974. So that's 15 years. 15 years of nothingness. Okay, you might have got some dividends. But 15 years, your money is flat. And you've had 15 years of inflation on top of that. And I had another one. Let's see if I can find it. And it was more recent. There it is. And I just rolled right by it. And here you go, right around July of 96, mid 96, all the way to, what is that? March of 09. So another 13 years of absolutely nothing. And that's the big risk. We get into everybody says, oh, just put your money in S&P 500 and forget about it. Well, what about, I'm going to forget about 13 years or 15 years of my money doing nothing? So, there's arguments to be said, because if you look at a S&P chart, let me see if I can move this back out. If you look at an S&P chart, it looks good. It looks like, it's on a steady rise up, and that's true over the long term. People say, oh, over the past 100 years, it's averaged 7%. Okay, great, but we don't invest for 100 years. Some of us only invest for 15 years, 20 years. And if we're stuck in a pattern like that, and we were expecting to grow our money, sorry guys, I lost it. But if we were expecting to grow our money from 96 to 2009 and we wanted to retire, we didn't get 7% a year or 10% or whatever they claim. It just didn't happen. So I guess this is the reason why you diversify. I haven't looked at the international returns or just certain sector returns. Maybe like the index of the dividend aristocrats did better and didn't have that. Holding gold. I know there's a gold spike here in this area somewhere. Real estate. How did the real estate market do? Well, we know in 2009 it did horrible. So I think an index fund like the S&P 500 should be a part of everybody's long-term plan. Whether that's 25%, 50% of your portfolio, I don't know. That's up to you. but I think you really need to look outside of the S&P 500. Look at getting into REITs. Look into the dividend stocks like the dividend aristocrats. Look into getting some gold. Look at international things. Look at some sectors, maybe follow some sector trends. But the S&P 500 carries some significant risk. And would you have been better off putting your money in, something else during that 15-year period? Here's the thing. Nobody knows. So it's best to be a little bit diversified across a bunch of asset classes. So that's all I got for you today. We'll talk to you later. Bye-bye.